Well, good morning, West Coast and Central U.S., and good afternoon to the East Coast and everybody in between. My name is Brad Etheridge. I'm the Chief Marketing Officer for the Center for Tax Strategies and Resources. For those of you not too familiar with us, we are a membership-based organization. Some people have said we're similar to a study group on steroids. Our members have access to some phenomenal talent from our industry, including top CPAs and tax attorneys, as well as top producers in just about every area or field related to financial services. And folks join our group to have access to those people, as well as gain training on techniques, proper words and timing, closing, better ways to market your practice. Kind of like a virtual sales office for our members. Today is an example of that. Leading up to our Academy events, we always do a series of webinars, or what we refer to as kind of vignettes, where it gives you a little bit of an idea of the type of talent that our members have access to. Today will be no exception to that. As the members know, this won't be a complete webinar with all the answers and facts, because we really like folks to be members to get all that. For the members of our organization that have joined this call to brush up on the topics, remember you can view the entire webinar on our website through the member portal. For those of you that are guests, we'll jump in a little bit later and kind of give you a little better understanding of what it takes to be a member, why somebody would want to join, and the other tools and talent that you have access to help grow your practice to the next level. So with that, I certainly hope you enjoy the webinar. Again, I'm Brad Etheridge, Chief Marketing Officer, and we are so proud to have you on our webinar here today. Thanks.
Always nice to hear you lie about me. It's good. So I think we're going to have a good time here today. Let me give you a little background. Brad's right. I started this business in the summer of 1966, frighteningly unsuccessfully. My job was to sell one unit of supplemental retirement income to union employees, and the one unit was $1,000 of whole life insurance that built $600 of cash value once they reached age 65, and I thought that they got both. If you ask me how many sales I made of that particular product, the answer is 0. If you ask me how many presentations I actually made to people, the answer was also 0. And that's really because of the fact that I was dropped down in an area that kind of scared me. So I hid for like 3 or 4 hours until they picked me up again. That is a true story. But over the years, I've been fortunate enough to get successful in this business. And it was attributable to the mentors that I had and the training I received, which unfortunately doesn't exist much anymore in our industry. We've become numbers on a page. And there's no human contact as far as information goes. Discovery has gone by the wayside, and it's which insurance company or assets under management company is lying best about their statistics. So the whole purpose of this is that, as I said, I'm in my 55th year now. The whole purpose is to see if we can start to upgrade the industry and bring it back to where it used to be, and have people actually help people as opposed to just sell them something. We develop, if you don't do this correctly, we develop what's called commission breath, and we're going to talk about that in a minute. So let me tell you what we're going to cover today. We're going to discover how to create more net practice income for you, how tax reduction plans, and that could be income tax, capital gains tax, gift tax, and estate tax, how tax reduction plans can help business owners and help your practice, tax savings and an income enhancement for W-2 employees and retirees. Tax saving is a process versus a product. Creating joint ventures with CPAs, tax attorneys, property and casualty companies, and any center of influence. Which strategy to use, why, and how. So, we get overloaded with strategies, but we really have not much idea about how they work and what they do and what's the good news and what's the bad news. But if you create relationships with CPAs and tax attorneys and help show them how you can help them generate revenue, they will teach you. And that's where most of my career came from. Access to resources with experts to help implement. We've got tax attorneys on the faculty. We've got CPAs on the faculty. We've got leading producers in both assets under management and insurance and estate planning on the faculty. They will make presentation and help you out if you need it. How to increase net practice income from qualified plans or IRAs without increasing risk, by the way. how to reduce taxes on retirement plan and IRA distributions, how to turn retirement plans into estate and income tax-free assets. So what is the center? Well, we're an organization that trains, mentors, collaborates, markets, provides access to major resources, and it's basically all about building teams using our resources, and it makes you more than you are if you try to do this on your own. Let me tell you what we're not. We're not an IMO, so you're not required to move your securities license to one of our organizations. We're not an insurance FMO. You're not required to move your licenses. You can run your business through any place that you want to. But if you'll let us help, we can make a really big difference, because the intangibles are always the difference. I mean, the reality is we all have the same products, basically. We all have the same tax law. We all have the same strategies. So why does one group of people, top of the table members, forum members, make 10, 20, 100 times more than the average producer? We're telling you it's always the intangibles. And if you'll let us help, if you're making $150,000 a year now, we can get you to $300,000. If you're making $250,000, we can get you to $500,000. The increases incrementally become smaller the more you produce, but there will be increases. If you'll listen, if you'll practice, if we'll do what we do ourselves and add it into your practice. Don't change your practice, add it in. So here's the industry's two biggest problems. Number one is marketing. Where's our next lead come from? Number two is mentoring. My whole practice is probably 10 times greater because of the mentors and the coaches that I paid for and that I was able to create relationships with. So let's talk about marketing first. Let's suppose you're at a party and somebody asks you what you do for a living. I mean, we're all told that we need to have a great elevator speech. I've never seen anybody make any kind of sale of anything in an elevator. So how do you answer that question? What do you do for a living? What do you say? Products and strategies are great, but you don't get to present them to somebody until you have somebody to talk to. So you've got 5 seconds to get 5 minutes in order to get 50 minutes. 5, 5, 50. 5 seconds, 5 minutes to get 50 minutes. In that first 5 seconds, if you don't say anything that will attract them, you don't get the next 5 minutes. And if you don't do the next 5 minutes correctly, you won't get the 50 minutes. So you got 3 choices how to respond. You could say something like, I'm a sophisticated investment advisor. We have the best investment platform in the industry. The client hears blah, 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 because he's heard that 15 times. The next thing you could say is, I specialize in helping people create effective estate plans that minimize estate tax. It's again, blah, 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 blah. Only the problem with that one is that really doesn't take effect until after people pass away. Or you could say, I assist successful business owners and entrepreneurs by reducing taxes in unnecessary capital gains, estate, and income tax. So which one do you think gives you a better chance? I'm an investment advisor, I'm an estate planner, or I can help you reduce your tax. Let me tell you what the problem is. The problem with that is they're going to say to you, are you a CPA? And your answer, if you become a member, your answer is actually, no, I'm not. But what we do is we train CPAs, we train tax attorneys. We're not smarter than they are. We just understand human nature better, and we understand how to speak the English language rather than speak in tax code. So let's see what's next. Once you get to talk to them, you're going to have something meaningful to say if you buy into our method. Let's see, it's not moving. Now I'll get it to move. So the key to access is to talk about what nobody else is talking about, and that is taxes. It's really important to speak to people about taxes because here's a historical perspective. In 1980, the top 10% of the wage earners paid 49% of all the taxes. In 1955, 10% paid 55% of the taxes. In 2000, they paid 66% of the taxes. And in 2015, they paid 71% of the taxes. Now, let me give you a horrible statistic. I'm in California. The state of California is one of the highest, if not the highest, state income tax states that there are. We pay a little bit more than 13% that's no longer deductible against our federal. Well, here's the statistic. We have 35 million people in California. It's a medium-sized country in reality, 35 million people, and yet 66 2/3% of all the state income tax is paid by 35,000 families out of 35 million people. So to think that they are after our clients and our potential clients is an understatement. Here's where taxes are headed. This is kind of a graphic. It shows that the highest tax rate was during World War II of 94%, but even in the 60s and 70s, it was at 94%. A Trump tax dropped it to 37. Obama is now saying 39.6, but if you add 39.6 to 10%, it becomes 49.6 in state income tax, or 13% like California, it becomes 52%. And the average tax rate between 1913 and 2020 is 57%. So we have a $27.7 trillion deficit right now. Do you think it's just possible that changes in Congress and the executive office will suggest that taxes will go up again and again? Let me tell you something. While that hurts my personal income, it also helps my personal income because I have more people to talk to about saving more and more taxes, and it will do that for you as well. So let me kind of read this to you because this is a little small. There's nothing moderate about Biden's proposals for to tax high income investors. The 2021, the top individual tax rate for somebody making $400,000 is going to increase to 39% from 37%. Long-term capital gains is going to increase to 39.9. So there's not going to be a benefit in long-term investment on incomes above $1 million. The investment income tax, or the Obama tax, is going to be 3.8, which is not deductible against the Fed or the state, and it's going to bring the total of 39.6.3 plus 3.8 to 43.4. The $23.4 million index estate tax exemption per couple is likely to reduce to $3.5 million, or $7 million per couple, or even $1 million, considering we've got Democratic control of the House, the Senate, and the presidency. And finally, Biden's capital gains taxes will occur at death, meaning you're going to lose the step up in basis. Now, we're not positive of any of those things, but in order to be prepared, we need to prepare ourselves. And this is what's on the street. This is what the tax attorneys and the CPAs are talking about. So the Wall Street Journal commented that although including Biden's 39.6 rate on income, factor in state income taxes, California's 13.3, New Jersey's 10.75. And by the way, there's talk of California state income tax jumping to 16.6 because taxing the rich is a very easy political football. Because if you tell the 34,935,000 people that we have to increase taxes, but we're only going to increase it on those 35,000, don't worry about it. It's not you. It's a simple vote. It's like having two coyotes and a chicken voting on what they're going to have for lunch. The marginal tax rate very well could be in the 60% category. It's important to pay attention to that. All right, heirs desires. These are people between 75 and 99. Those are people that are typically very difficult to do estate planning for, especially when they're over 80, 85, and 90 years old. We've got some strategies that work even when they're 99 years old that help to significantly reduce the tax. We don't have time to talk about it right now, but let me tell you, there are ways to be able to use insurance product to be able to substantially reduce the estate tax and sometimes even get it down to zero. So here are the statistics. Many grandparents have sizable estates and face significant transfer taxes at death. It's often too costly to obtain transfer tax leverage with aging grandparents or in those in poor health. As a result, many grandparents need alternative solutions for transferring their assets generationally. Children and grandchildren often have their own estate planning needs and can benefit from what we call second and third generation planning. Really important to focus in on this because one of those sales during the course of the year can actually make your year. So what's the purpose? The purpose is to produce tax-free growth inside the second and third generation planning. The next piece is to plan provides for liquidity for taxes on children and grandchildren's estate, as well as a reduction in tax on the patriarch. The survivor benefits can be income and estate tax-free. Grandparents' estates will be reimbursed at a much later time. Grandparents' estate will receive tax savings. And then let's discuss how to make money grow and just how important tax saving is. We call this piece uninterrupted compounding. And I don't care what Fisher says or what Susie Orman says or Dave Ramsey says. They are not talking to our client. They're talking to middle America, and their advice for middle America is probably correct. But that's not what really works in the real world, in our market of the upscale people, people with $1 million net worth or more. So let's play a little game. If you took $1 and you doubled it every year for 20 years, how much money do you think you'd end up with? So $1 becomes $2, becomes $4, becomes $8, becomes $16, et cetera, et cetera, et cetera. At the end of 20 years, a single dollar would become $1,048,000. It's uninterrupted compounding, uninterrupted with fees, uninterrupted with taxes. Here's the numbers. It goes from a dollar, et cetera. You can see down at the bottom, it's $1,048,000. Run the number yourself. Now, I'm not suggesting you can make 100% on your money. I just want to give you evidence of how important the reduction of tax is. Now, let's take the same dollar, do the same exercise. Let's double it every year for 20 years again, only this time, let's subtract 35% for taxes each and every year. So you're really only making 0.65 net, not 1.0 net. How much do you think you'd have at the end of 20 years? Well, the answer is $22,370 versus $1,048,000. That's $977,000 of unnecessary tax if you only learn how to play the game by using some of the resources that we have available. If you learn to understand and communicate this exercise, you'll have an unlimited number of people to talk to because they don't understand it. So here's the table on how those numbers calculate. So how can you reduce taxes for small business?
Well, this seemed like a pretty good place to kind of jump in. Hope you're enjoying the program so far. You know, I've been doing this for 37 years and I absolutely love our industry, and so does the rest of the team at the center. That's one thing we all have in common. We don't really feel like we have to work for a living because we enjoy what we do. Question I've got for you in the audience is, when is the last time a single idea added $50,000 or 100 or 150 or $300,000 to your practice revenue? Think about it a minute and realize that our members can say that they have that happen on a very regular basis. The reason folks join our group is to get ideas and concepts and training and techniques and better ways to market their practice. This is a very interesting organization because we don't have an axe to grind. This isn't an IMO hiding as a training organization. It's a training organization that just happens to know a lot about our business. We have an event coming up called the Academy. We're going to be holding it toward the end of January, early part of February. We'll announce the date shortly. That is a 3-day program where we bring in unbelievable talent that will bring new ideas and concepts and techniques and tools to double or triple your practice revenue. If you join or if you don't join our organization, you will walk away with ideas that can add a lot of zeros to your practice revenue. So pay attention to the announcements at the very end. We'll give you an email address too if you want to ask some questions about what you've heard, or if you want to find out a little bit more about why somebody would become a member or try to become a member of our group, or a little bit more about the Academy. You can reach out to me. We'll make sure we've got my email address up there. So enjoy the rest of your program.
Well, we call it tax reduction plans, and it's one of our tools. So if you want to learn, and by the way, let me back up on this for a second. These tax reduction plans are put together for us. They're fee-based plans. They're put together us by tax attorneys and CPAs to help small business be able to reduce the tax. And the question that's always going to come up, well, I already have a CPA. Well, do you have enough confidence in your CPA to get a second opinion? Because I will tell you, almost always, we're able to get significant deductions and tax savings. I mean, we've had some $90, $100, $250,000 of annual tax savings by things that the CPAs know about, but they don't specialize in, so they don't bother talking about them. Okay, marketing. How do you find a client? That's the key element in our business. Well, there's two key elements. How do I find a client? Number one. Number two, how do I get them to engage? Let's first talk about marketing. How do you find the client? Who do you talk to? Well, you could start with your existing client base. You might have already sold them annuities, insurance, be managing their assets. You might have set up a 401k, but what you haven't done is you haven't talked to them about saving taxes. You might check with existing prospects because now your world becomes far expanded. You might look for wealthy people or business owners who are looking to pay less tax. Owners of qualified retirement plans have some strategies to be able to contribute more and pay tax on less. Doctors and dentists are great targets. We've got a specialized program called the Doctors Academy of Economics that basically works through those. I'll tell you a little bit more about that later. Property and casualty agents. So it basically is anybody that's a center of influence, anybody that has influence with more than a couple of people. CPA practices, major part of my practice. So only this time when you talk to them, you're going to be talking to them with new tools, new words, and new resources, which will elevate your level of respect with them. So how to open the conversation? Here's some questions. Do you know what your largest expense is? Now, a lot of people will say, well, my spousal support, my child support, my mortgage payment, et cetera, et cetera. But if you say to them, well, what about taxes? They'll go, oh yeah, I guess that is my largest expense. I just never thought there was anything I could do about it, so I don't spend much time thinking about things that I can't do anything about. Do you believe taxes are going to be higher or lower in the future? These are questions to ask them. What's your plan to minimize this tax damage? What plans do you have to create tax-free income during retirement? Is your retirement plan self-completing if you become disabled or pass away? Let's see what else we got. Begin with the end in mind. Number one, there are ways to be able to set up huge pension plans far in excess of 401ks, $500,000, $600,000, $700,000 a year, providing that there's not too much money going to the rank and file employees, and there are ways around that issue as well. You set up multi-million-dollar contributions per year, automatically sell life insurance, and gather assets under management, and there's a potential to include post-retirement medical care on a tax-deductible basis. Learn how to do zero tax planning. You've all read that book about zero tax planning. Well, we have them as one of the speakers for high net worth individuals. It works for middle America and below, but there's some real issues as to how do we make it work for high net worth. Learn the language needed to engage clients without talking about products. How about premium financing the way it should be done, meaning minimize the risk? Because talking about, look, there's the two things that people don't like. Number one, they don't like life insurance. Number two, they don't like debt. So what is this, an algebra class where if I have two negatives, I turn it into a positive? Understand that people don't like debt and they don't like life insurance. And lo and behold, we come along with premium financing, which combines the two together, and we think they're going to jump at that opportunity. There are ways, well, they will jump, but you have to be certain that you're going to discuss what the negatives are as well. Bring up the objections to begin with. Don't expect to be able to put your head in the sand and that it's never going to come up, because even though they may not say it, they're still going to be thinking it. How to create $2.2 million tax deductions each year for business owners with the blessing of Uncle Sam and gather large assets under management. Learn about a system that automatically creates and adds assets each and every year without looking for new clients. Recapture previously paid taxes. That's what the advantage of these tax reduction plans are. There are ways to recapture previously paid taxes. How to create relationships with professional advisors, CPAs, and attorneys. I'll go into that a little bit more a little bit later. So what is the process for success? Well, number one, it's mentoring. It's the people you associate with. It's resources. You can't know everything, and you certainly can't become an expert at everything. It's learning how to do proper discovery in a conversational fashion. It's not just assets on a page. It's not earnings and taxes and where your assets sit and in what amount. It's what's going on in people's heads and their heart. It means a lot more than what's going on in their pocketbook, and all our industry ever talks about is what's going on with their wealth. Prioritized and signed off on goals and objectives. It's a way to be able to keep people focused. It's a way to do what we call dropping the gate behind them, so if they change their mind, they realize they're changing their mind. By the way, my E&O and malpractice company loves this prioritization of signed off goals and objectives because it establishes a reason and a purpose why I attached a specific product or strategy to a goal and objective that they were not otherwise able to capture. Strategic planning teams. We don't try to do this on our own. We do it in conjunction with their existing CPA, with their existing attorney where possible. And if they need some assistance, we can get them the type of assistance that they need. Attach strategies. I mentioned this before, to goals and objectives that the client not only recognized, but determined that they wanted to do something about. That's the way you get closure. So here's some of the top strategies that can benefit your client and increase your revenue. Create qualified retirement plans. Believe me when I tell you, there's a lot more to qualified retirement plans than doing a 401k where the owner gets to put away, a couple of $10,000 a year. He's not going to be able to retire on 401k. He will be able to retire on defined benefit plans. He will be able to retire on non-qualified plans. How to reduce tax liens on qualified plans. If we ask people who've got on their balance sheet, they've got $1 million in their IRA, and we say to them, how much of that is yours? They'll say $1 million. And you say, wait a second, what about taxes? Oh, well, yeah, okay. Well, so therefore your net worth really isn't the million in that plan. It's more like 400,000 or 500,000. Isn't that true? They'll say yes. Would you be interested in ways of being able to reduce those tax liens on those qualified plan assets? The answer is almost always yes, but with a certain amount of cynicism. How about qualified plan conversion to Roth IRAs without having to take 100% of the tax money out of your pocket. You can do it with 25, 30, 40 cents in the dollar as opposed to 100 cents in the dollar. How to maximize tax-free income. How to maximize after-tax income from pension plans. How to create advanced defined benefit plans which automatically produce assets under management, life insurance, and annuity sales. How about exit strategies for defined benefit plans, profit sharing plans, and IRAs? Exit strategy. Our industry spends all kind of time talking to people about the contribution phase. Well, there's three phases of money. The first phase is the contribution phase. The second phase is the accumulation phase. And the third stage, and far and away the largest, is the distribution phase. And nobody talks to the client or the professional advisor about exit strategies. How about exit planning for business owners? One of the tax attorneys that I mentioned before, Joe Strazzeri, is the president of two exit strategy locations, one in Orange County, one in Los Angeles, and that's three, and one in San Diego. It's a different world talking to people about, how are you going to retire? Is your business going to be sold inside or outside, to employees or to strangers? How are you going to price it? How are you going to create a greater value in that business so it sells for a greater amount of money? How are you going to replace the income that you're taking that's both recognized and hidden someplace in your corporation in order to pay all of your expenses? All issues that all business owners are interested in. How about Section 199A? Now, that's a couple of years old now, whereby somebody earning between $314,000 and $414,000 can get an automatic 20% if they're in the certain correct type of business. So it's something that's worth talking about. The CPA knows about it, but if you've noticed, CPAs don't give much prospective advice. They basically put the right numbers in the right boxes and file in the Internal Revenue Service, and they think that they did a great job if there was no audit. That's not tax planning. But they were engaged to do tax planning. The client thinks that not only does the CPA know everything about the tax code, but that they will make recommendations. And I will ask every one of you, when's the last time you ever got a call from your CPA with a piece of prospective advice that saved you income tax? And the answer is almost always never. Almost always never, where your clients are identical. How about S corporations or C corporations or both? There's an arbitrage. The S corporation is taxed at a personal rate. Right now, that rate is 39 and change. The C corporation is 28%. That's 11% positive tax benefits by utilizing C corporations for non-deductible expenses. If you're going to pay tax, at least pay it at a lower rate. Top ideas and strategies continue. How to reduce personal and corporate tax to increase cash flow. If you increase cash flow, you're going to have more money to be able to talk to them about investing or saving or buying insurance or funding retirement plans, et cetera, et cetera. How to use tax savings to produce tax-free income. Think about that. I save, if I make a $100,000 contribution to a defined benefit plan, I save $50,000 and maybe $5,000 of it goes to my rank and file employees. So I have a cost, it's $5,000. I got another $5,000 cost for the actuarial firm. So my out-of-pocket cost is $10,000. But if I had just paid the tax, my out-of-pocket cost was $50,000. Which one would you rather pay? The $50,000 or the $10,000? Backdoor Roth conversions, no matter what your income is. How to use charitable trust and pooled income funds to create large tax deductions to help you fund your Roth conversion. How about mentoring and educational resources? Really important factor here. We provide access to the most creative and successful tax attorneys, CPAs, and financial planners in the industry. And their assignment is to work with you, if you want, educate you, and make you more successful. How about mentoring? I will tell you right now, the people that got me into the Forum 400, the people that got me into the top of the table, they saw some talents that I had, but it was very, very unsophisticated talent. And they took and they upgraded the level of that and helped me become 5, 10, 20 times more successful than I had been. So in mentoring, it's important to be trained in the sophisticated areas of tax law. That's only proactive CPAs and taxis even know about. Or you can use our experts, or you can use our experts in conjunction with their CPAs and tax attorneys. You become much bigger, you become much more important by being a member of a team. You can break into the doctor and dentist market. Our strategic partner, a surgeon of 30 years, can train you how they think, how they process information, and how they make decisions. Really important. You can market to business and property and casualty firms with customized videos and documents to generate interest. We're talking about 1.5 to 2.5 minute little videos that are customized to you. Our name appears no place on them. All of our training, mentoring comes from CPAs, tax attorneys, top of the table and Forum 400 members. If you will open the door, we can help you close it if you want the help. If you don't want the help, you can still use the information. How about charitable planning in the right words to generate interest? Let me tell you about charitable planning. Most of you are familiar with something called charitable remainder trusts. If you ask a CPA or a tax attorney how many charitable remainder trusts has he ever implemented in their practice, the answer will almost always be less than 5. In many, many cases, it'll be 0. Now that doesn't make any sense. In other words, being able to sell an appreciated asset without having to pay capital gains tax, well, why would I want to pay capital gains tax if I didn't have to? Being able to get an income tax deduction for making a contribution to a CRT is better than making after-tax investments to my own portfolio. Being able to get tax-free growth on 100% of the money as opposed to taxable growth on 50 or 60% of the money, that doesn't make any sense. So the technology of a charitable remainder trust is extremely valuable, and yet most people don't do it. And let me tell you why. This is an opinion. I can't swear to you it's right, but I think there's some words that people must understand they're meeting, or they misinterpret what they think they've heard. Let's talk about a couple of them. Charity, that means to most people, that means I have to give things away. When I give things away, I'm poorer. When I give things away, I lose control. I disinherit my children. So that's not positive. All right, I give things away. I'm poor. I disinherit my children. I'm poorer. I can't change my mind. Well, if we change those words and we start talking about what things do as opposed to what they're called, you'll find a completely different result. We call charitable remainder trust, and by the way, the charitable remainder trust, pooled income funds, charitable lead trust, all different kind of family foundations.
Well, I hope you enjoyed the mini webinar here. Again, just a reminder to those of you that are members that are on this webinar, you can go to our member portal on the website, yourctsr.com. Put in your credentials and you can watch the entire video at your leisure and playback parts that you need to have more clarity on. For the rest of you, hope you enjoyed this. Listen, these webinars are done to entice you to find out more about our organization. It is unlike anything that we're aware of in the industry right now because we don't have a product to push and we're not an IMO pretending not to be. It is about education. It is about building some unity between independents. It is about increasing the marketing for your practice and making you better at what you do, being able to offer your clients better solutions. We like to say that our members are independent but not alone. If you want to find out more about our organization, more about the event I talked to you about earlier, the Academy coming up, I'd be happy to communicate with you electronically. My email's on the screen right now. Feel free to reach out to me. I'll reply to you pretty quickly. And if there's something we can answer questions for you, want to find out more about the upcoming Academy or find out more about membership, please feel free to drop me a line, brad@yourctsr.com, and we'll start up a conversation. I wish you success and health and look forward to seeing you, hopefully seeing most, if not all of you in Vegas in a couple months.